The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. It's April 4th, 2019, and it's another webinar, CFRN Thursday. It's about 10 to 1. I opened the room up a little bit early so I can go over the disclaimers that I have to present before discussing markets. So it's pretty slow at the desk here, so I'll take that opportunity to go over some of the finer things I have to talk about. Game plan this afternoon, spend 1 hour going over the trade setup. Okay, that's what we're going to see right here. I'm going to break that down. You're going to see the trade setup that Michael is doing inside the training room. You'll get to know some of the buzzwords. Just going to break it down. So when you're in the training room, you are familiar with what's going on. It's kind of a slowed down version. So we're going to go over that. And then we're going to take the information that's in front of us, and then we'll jump into a live market, and we'll go inside the DOM here, and we'll put trades on, we'll manage them, and then we'll take them off. Okay. Throughout the hour, I'm going to make some observations, some traps that people kind of fall into. I'm going to label over markets, whether they're trending or not. You're going to hear me talk about using trend lines. You're going to hear me talk about all that good stuff. And the idea, again, if you're brand new, this is going to give you a good syllabus or a cheat sheet to rely on what to expect. Okay, your eyes are wide open. At the end of the trial, then maybe you have a better understanding on whether you want to do this or not. Okay, so that's the game plan. This is your syllabus if you're brand new. This will give you an opportunity to ask questions too. So it's a slowed down version of it. So we're going to, if we do take something, I'm going to review the trades, and we'll just kind of put it down in first gear. Okay. If you're a CFRN member, I'm happy that you guys are here. Ask questions along the way. Again, I'm going to go over some of those things that if someone is struggling, the traps they fall into, and then hopefully you'll absorb some of that stuff and stay out of those same traps that some of the other guys are. Okay. So that's a scoop. All right. So we'll hang out for an hour. Let me get everything in front of me so I can see your questions as they pop up. That's right. Okay. All right. So let me start with the disclaimers because I don't take this lightly. I do like to go over them because anytime you enter our space, which is trading futures, which is also associated with leverage, this disclaimer is a warning flag. Okay. Basically, what it says, you can lose everything and some in your trading account if you're not using stop losses, if you don't have a trading plan, if you're not engaged in the market, if you're not looking over your trading account, if you kind of turn your back to the whole markets. Okay. So this is a reality if you negate to do any of that stuff. I've been doing this for almost 25 years, and I really have seen the good, the bad, and the ugly. So again, I don't take the disclaimer lightly. That's why I kind of put it in fine print and highlight it, because it is a reality if you're not doing those things. Okay. It also says, hey, the money that you're putting in a trading account should be risk capital. It should be capital that you can afford to lose. All right. So that's the other side of the coin. All right. Now, my experience being in the room from day one, most of the guys that ultimately become CFRN members are kind of numb to the disclaimer because they've been to this room, that guru, this room, this guru. They've been around the block. They've been beaten up, bruised pretty bad. So this disclaimer, they're like, meh, I've seen it. All right. Again, it's just basically for those guys that are brand new. Okay. It's a big warning flag. And I know starting out a webinar being a downer here, and kind of scaring the new guys here, this is a reality. Okay. but I don't take it lightly. The bottom line is this, okay? If you go down the CFRN path, right? Every trade does have a stop loss, right? We have an 8-tick stop attached to every trade. We have a set of rules, right? I'm highlighting 4 simple rules. All right, now hold on. My phones are going to buzz, so I'm not ignoring you, so I'm going to hit the mute button and answer the phone real quick. So like I said, the good thing is, and I'm back, you're going to have a set of rules. I highlighted 4 simple rules. If you want to add another one to that, we're going to talk about markets that are trending or not, right? So there are basically 4 simple rules. So number 1, you're going to have rules. Number 2, you're going to have stop losses. You're on a 4-tick range chart. So you're looking at the market under a microscope. All right. So you have to be actively engaged in what the market's doing. All right. So that's the other one of those variables that I just highlighted. You're going to have aggressive risk management rules. Okay. So again, you'll have to be in front of a platform. You'll have to be in front of the screen. Okay. You'll again have to be engaged in watching what's going on in the marketplace. Okay. CFRN, one of their hard rules is they don't trade in front of report or around reports. Okay. That's another thing. Awareness, right? So again, laboring over this disclaimer, okay, it's out there. It's in bright lights, okay? But again, if you go down the CFRN path, you're going to overcome some of those obstacles because you have to be in front of the screens. There are rules, there are stops, all that stuff that kind of waters down what could happen if you trade an opinion and you set it and forget it and just kind of walk away, okay? Now, in the end, if you do all the right things, you place a stop loss, you're in front of the screens, you're watching your trading account, you're doing everything, all the right stuff, right? In the end, if something does happen, a news item comes out and the market does an about face and gets crazy on us. If you have a stop loss in place, there is the risk of that stop not being elected. Okay? Whoa, wait a minute. No one told me that. They probably didn't. But the bottom line is this. If you're in front of the screens, again, engage in what you're doing. If the black swan event happens, you're in front of this tower. Okay, this is where we're doing all our buying and selling. If that happens, you are going to freak out. You are going to get mad. But what you can do is you can hit this exit at market and cancel button and get the heck out of Dodge. And then figure out what the hell just happened. Okay? So that is the worst case scenario. Like I said, I've been doing it for almost 25 years, and I've seen it happen maybe 2 or 3 times. Okay? Your best policy, if it does, hit the hot key and get the heck out of Dodge. Okay? All right, now that everyone is about left the room after that, let's talk about the next disclaimer, which is my relationship with CFRN. Because no, I don't work for CFRN, and no, CFRN doesn't work for Daniels Trading. Okay, there is a line in between. Okay, they are the indicators. It's their indicators. Okay, they're the educator. Okay, it's their trading tools. It's their property. Okay, so what happened was, probably 10 years ago, Michael and it was just the radio, CFRN.net. They were just doing radio. Dwayne was in there, and him and I crossed paths, and he said, "Hey, why don't you come on the radio program, talk markets? You can answer any questions that our listeners have." So I said, "Sure." And the biggest thing that I noticed in the background were people kept asking him, "Hey, can you teach us? Can you teach us? Can you teach us? Can you show us the charts?" And so ultimately, he got together with Michael. It turns out my platform, which is the one I'm featuring here, DT Pro, reads easy language. And so Michael and Dwayne are TradeStation developers, and the platform is free. It was The only thing that you pay now for is for data. Back then, we weren't even paying for data. But the bottom line is, it was a kind of just lucky. You know, it was at the right place at the right time, and they coded it. They coded the indicators in the platform. So in the end, I represent the platform execution, the brokerage, if you decide to go down that path. If you decide, hey, I want to be a CFRN member, um, any money that exchanges between you and them, okay? Um, anything on their website, anything on the members area, any videos and Thursday night workshops, all that stuff, you'll reach out to them directly, okay? Um, the plus one to all this is that I'm in the training room every single day. I know the setup, okay? That's why I host this 1 hour session, because there was a demand for people. You know, people were saying, look, slow things down and, help me absorb this in a a simpler manner. So I said, you know what? I'll do it. I have the knowledge to do it. I could do it on our platform. It's in slow motion, and there's a mutual benefit, right? If you do well, I'm going to do well. Okay. If you're lacking confidence and you haven't pushed the button yet, maybe some of these Thursday afternoon workshops are going to tip the scale, and you ultimately start trading. Again, it's a mutual benefit, so we all get that, right? And so I've seen, if someone is struggling and they need help, I've seen enough screenshots where people said, hey, was this a valid trade? Was this not a valid trade? I've done a lot of critiquing along the years to say, you know what, I'm seeing a common thread here. No, this is not good. No, this is not good. And that was a big benefit in doing the Thursday afternoon workshop. It was to highlight those things that maybe people are struggling with, and I could broadcast that out to everyone, so people don't fall in that same trap. Okay, so again, that's why we're doing it. So I try to be consistent every Thursday for an hour. If you can't be here, or if you miss half of it, I record them. They're out on YouTube. If you go to YouTube and search CFRN Thursday, you'll see all the videos there. Sometimes we get some really hot markets that are moving. Sometimes it's kind of lame. It's not much going on. So, we make the best of it. Okay. That's it. All right. So hold on. Let me shut down live. I'm in demo mode. Okay. This is for training purposes only. So let's be clear about that. All right. Well, let's get into the rules. Now, for some reason, again, my template got screwed up, so I have to use this kind of Mickey Mouse little one. And hopefully I could walk you through the steps here without cluttering it up too bad. I'm not going to monkey with it. So I'm just going to make the best of it. All right, so here we go. First thing we do is we get on the correct time frame, and we're on a 4-tick range chart. Okay, 4-tick range. So if I have DT Pro, how the heck do I get here? Well, chances are you're on an hourly. You might be on a daily. Whatever time frame you're on, chances are you're not on this 4-tick range chart. So in order to get there, top left-hand corner of the chart, drop down box next to the time frame and go down to custom. The box will open up here and select range bar. Make that one look like a 4. Once you hit OK, here you're looking at the crude oil in May on a 4-tick range. Okay. The first trap that people fall into, they'll go down to custom. They'll select the tick bar. I'll make that 2 and make it look like a 4, and it's not tradable. Okay, that's not a visual picture you can take action on. So again, 4-tick range chart. Okay. The last trick to all this, when markets are moving fast, we have some now, the Dow, the NASDAQ, and the mini Russell. Okay. When those markets are moving fast and popping around, we will switch to an 8-tick range chart. Okay, the same rules apply. Okay, the same 4 simple rules. Okay, the only thing that has changed, as advertised here, there's an 8-tick stop attached to every trade. With a 8-tick range chart, your risk now is 16 ticks. Okay, so same rules apply, just the risk has doubled. Okay, but for training purposes right now, and what you're going to see in the training room, Michael's on a 4-tick range, and that's what this webinar is all about, to get you accustomed to what you're seeing. Okay, all right, 4-tick range chart, that's checked off our list. Now, the top portion, okay, of the chart. So this red and blue line here is referred to as the MA1. Okay. The green line here, okay, this is referred to as the BBC. That is short for bullish and bearish cross. Okay. Together, okay, makes up step number 1, and that's this. When the MA1 crosses the BBC, okay, remember that red and blue line? That is step number 1. That kind of lights the match to everything. Okay. If the MA1 is red, you're looking for a shorting opportunity. If the MA1 is blue, you're looking for buying opportunities. Okay. The one that's highlighted, okay, and I apologize for the image, that is a bearish cross, and the reason is the MA1 is red. Okay. Now note what I didn't say. I didn't say go short, go long, go short. I said we're looking for shorting opportunities. Okay. Because it kind of leads us into step number 2, which is this. After you get the cross, okay, here's the bearish cross right here. Why is it bearish? Because the MA1 is red. The normal thing for the market to do is to gravitate or flag or trade toward that BBC, which is that green line. Kind of what you're seeing here. So that's the normal thing. Okay, we're looking for the market to gravitate toward the BBC. So not only we're looking for this price action here, we're looking for a touch and then a close in the direction of the trend. Okay, we identified the trend as being bearish because the MA1 is red and it's crossing the BBC. So if we have a red MA1, we should be looking for a red candle or a down close. Okay, at the end of this, what you're going to find out is that when everything is the same color, the MA1, okay, the down close, a red cycle, when everything is the same color, that's stacking all the probabilities in your favor. Okay, so rewinding the button here. MA1 has crossed the BBC. We're looking for a shorting opportunity. Now, step 2, we're looking for the market to do the normal thing. Pull back to the BBC and close in the direction of the trend. Okay. Step 1, check. Step 2, check. Now, our eyes are going to gravitate toward the oscillator portion of the chart, which is called the slingshot. Okay. Basically, the trade exists down in the slingshot. Okay. And I'm going to show you why. But I have to define some of the what's going on down here. Okay. So some of the buzzwords. This red and blue line is referred to as the cycle. Okay. The green line, nothing fancy about it. That's referred to as the green line. Just, it is what it is. Why are the two important? Okay, so here's the scoop. We don't want that. We want the pen. What the cycle is telling us is this, guys. It's red. The momentum is bearish. Okay. It's telling us the market should be going down. That's what this is telling us, a red cycle. If it was blue, Okay, it would be suggesting the market or the momentum of the market should be heading higher. Okay, in this example, it's saying, look, we're going down. The momentum is going down. This green line pulling away, okay, away from the cycle here. It's like a slingshot. That's why it was named. It's like pulling a rubber band back. Okay, what this is saying is this price action up here, which is normal, right? After the cross, it's normal for the market to pull back and gravitate toward the BBC. Once you get that down close and this green line pulling away from the cycle, it's saying, look, this price action here is just a little air pocket in this ongoing downtrend. All right. And with this down close or this reaction against the BBC, and with this divergence, and this is what this is referred to, step 3, divergence, Michael will refer it to as separation. Okay, separation or divergence. The separation between the green line and the cycle, okay, is creating step number 3. Okay, it's saying, look, get short. Because what we expect to happen is this green line is ultimately going to come down and connect the dots and hit the cycle. And it's at this point here we get out of the trade. Because what we also do expect to happen is that the market is going to make a new pivot low in the process. Okay? So what's happening is this. The green line pulls away from the cycle, it closes the gap. It pulls away from the cycle, closes a gap. Pulls away, closes a gap. Keeps doing it until guess what? The momentum has turned bullish. So now we're looking for the green line to get underneath the cycle and create bullish divergence. Okay? So along the way, we're selling this rally, selling this rally, selling this rally, and buying this dip, and buying this dip along the way. As long as the main ingredient is happening, which is we're trending. We're making lower lows, or if we're going up, we better be making higher highs. Okay? We have to be trending. So if there's something you want to put down on a piece of paper, the first thing that you put down is number 1, we should be trending. Okay? That's number 1. That sets everything in motion. We have to be trending before we do anything. Okay? Now, I'm brand new to the game. Just signed up for CFRN. I'm on the trial. What am I signing up for? You're not going to learn to pick the top and pick the bottom here and trade it from point A to point Z. You're signing up to take a piece out of the middle. You're on a 4-tick range chart, so you're looking at the market under a microscope. Okay, you have 4 rules, right? And you have aggressive risk management that I haven't even covered yet. So what you're signing up to do is scalp. Okay, and as soon as these rules fall into place, you're going to get in and you're going to manage the trade from start to finish. So you'll have to be in front of the screens. Okay, you'll have to be in front of a platform. All right. Not only that, you're going to have to take some time to learn the platform. Okay, because this is what we are executing everything on, which is this. We call this a depth of market or a tower. Okay. Thought I shut my email down. Okay, we're buying and selling everything off of this. Okay. So if we're bullish about something, if we get a bullish indication, we're going to left click in the green, and we make money if the market goes up. If we get a bearish indication, we're going to left click in the red, and we make money if the market goes down. Period. Everything's done here. Okay. So you're going to learn. You're going to have to learn, if you're brand new, how to use the DOM. Okay. The good thing is CFRN promotes paper trading first. Practice, practice, practice. Be consistent. Okay. So that's the key. All right. That being said, Not only that, every trade has an 8-tick stop attached to it. Okay, so if you're brand new, what am I risking per trade? That means if you're trading the gold or the crude, you're risking $80 a contract. If you're dead wrong. If it's the soybeans or the S&P, it's $100 per contract. If it's the mini Dow, it's closer to $40. Okay, so that's what you're assuming every time you push the button. Okay, the idea and what Michael labors on in the room is to get the risk off the table as quick as you can. Okay, but there are rules in place, and we'll go over those when we see a setup. Okay, so that's it. That's the rules breaking down. That's what's going on in the training room. There's a few curveballs to it I'm going to go over. Okay, but this is the nuts and bolts of it right here. Okay, so now we're going to get into a live market environment. Okay, so this is DT Pro. These indicators are already built into it. Okay, so I'm not gonna take time to go over that. We're gonna go over the setup, make some observations, and go from there. Tim, I haven't ignored your question. I'll go over that a little later. Okay, and maybe that's something you and I will talk about outside the room. Okay, but I'll show you. All right, as I said earlier, first thing we talk about is a market trending. Okay, so under that line item 1, there's something else you want to put under it. You should write down, Bert says, you should get in the habit of hitting the zoom out button. Okay, because sometimes you get hypnotized by what's going on in the training room with, magnifying glasses, right? You see this big picture, all right, and you see a market that's pulling back, it has all the variables, but if you took a few minutes or seconds to zoom out, you might find that we're bumping our head up against resistance, and maybe you shouldn't be executing trades or not. Okay, so number 1, are we trending? And 2, get in the habit of hitting the zoom out button. Okay, the reason you're doing this, so you can look left, so you can see prior support and resistance points. Okay, that will keep you out of some bad trades. Okay, that's a big thing that I see people fall into. They're seeing this, but if they took a few minutes to do that and zoom out, they may not push the button. Okay, so consider that. All right, so let's go across the board here. Okay, so are we trending? Crude oil? Zoom out. Are we trending here? No, we're not. We're trading sideways here. We're inside this box here. Okay, we got a little bit of sideways action. Okay, now as we blow this thing up, you might say, hey, here was an opportunity right here, right? Bullish cross. The market did what? Did the normal thing and pull back to the BBC. And of course, there's my phone. 1 sec. All right, step 1 and step 2 are valid here, right? Bullish cross. Why is it a bullish cross? You got a blue MA1. Okay, what's the normal thing for the market to do after this cross? Pull back to the BBC. We got the pullback, right? It touched it right there. What's the next process of thinking about this? We need an up close or a blue candle. Blue MA1, blue candle, right? All systems go. Do we have a blue cycle? We do. Is the blue green line underneath it? Yes, we have some separation. Remember that buzzword I talked about? Okay, so this meets all the criteria for it to go up. All right, but the question is, was it trending at this point in time? Okay, this is here. So remember, this is what we're looking at. If I zoom out, we had resistance over here. Okay, so to see this price action against this old resistance doesn't surprise me. Okay, if I were staring at this, given what I'm seeing as I zoom out, no, I wouldn't have taken this. Okay, but look what it did, Bert. You missed out on this. Yeah, I did. Okay, the idea, it has to be easy and obvious, guys. All right, it has to be easy and obvious. If it's not, just don't push any buttons. Okay, here's a bearish cross. Okay, MA1 is red and crossing the BBC. Okay, what's the normal thing for the market to do? Pull back to the BBC. Okay, we have it going on right now, so there's potential short setup. Now, as the question is, are we trending? What do we do? Zoom out. Nope. As I said earlier, we're kind of congested here, but I tell you what, if it qualifies, we're going to push the button. Okay, because I want to show you how to execute a trade on the DOM. Okay, so we would be looking for a down close or a red candle. Okay. Okay. So, bearish cross, pull back to the BBC. We're looking for a red close. All right. Here's what you're going to hear sometimes in the room, and this happens a lot, so pay attention. Okay. If the high, Michael's going to call off highs and lows. If the high is 62.62, then the low has to be 62.58, right? We know every candle is 4 ticks in height. Okay. So the low has to be 58. What Michael is getting you ready for is this. He's being proactive. Okay. He's placing orders in advance. Okay. So like I just did, if the market breaks down here, I'm going to be short. Okay. As the market breaks that level like it just did. All right. So hold on. All right. So this was the short right here. Okay. Now, every trade has aggressive risk management attached to it, right? Here are the risk management points. If the market goes plus 4 ticks in our favor, we're going to move the stop to break even. Okay. That's risk management rule number 1. Risk management rule number 2. If the market closes below the MA1, right here, as it did, we're going to move our stop to break even. Okay, as I did. Break even is your entry price. Okay, right here. All right. So what I just did, okay, let's move it down a little bit further. So what I did, okay, is I created a bracket order. See this button here? Notice how I push it, the bottom of the DOM opens up. Okay. If you select sell stop and buy stop, okay, and you put the right click over that and go factor in ticks, right click over factor in ticks, make that an 8 as I did here. As soon as you enter the trade, as we did, it's automatically going to place a stop loss for you. Automatically going to do it. Okay? So that's one less button you have to push. Now, what's the normal thing for the market to do? The green line's supposed to pull away and, right, get into the cycle. And in doing so, the market should make a new pivot low. Remember, the trade exists down in the slingshot, right? That's the normal thing. All right? So that's what we're looking for. Okay? So we got short here. Okay? There was a stop loss placed right away, 8 ticks away. So that stop was right there. And as the market started falling apart, we just moved the stop, moved the stop, moved the stop. Okay? Now, how do you move the stop, move the stop, move the stop? That is the stop loss right here. All you have to do is left click over it and drag it and release. Okay? Left click over it, drag it and release. That's all you have to do. Okay? So there's not a lot of heavy lifting to do. Okay? So that's where we're at. Okay? So the reason why we got short, we had the bearish cross. The MA1 was crossing the BBC and it was red. So what's the normal thing for the market to do? Pull back to the BBC. Not only are we looking for that, we're looking for a down close or a red candle. We're 2 for 2 for color, right? What color is the MA1? It's red. No, we're 3 for 3 with color. What color is the cycle? We're 4 for 4 with color, right? Is the green line pulling away? Do we have that separation? Yes, we do. But do we have a lot? No, we really don't have a lot here. Okay? Ideally, this is a lot of separation, right? If you pull a slingshot back and you really pull it back, right, the further it should go, right? This was a modest pullback, so you shouldn't expect a lot to the downside. Does that make sense? Think about that slingshot picture, okay? All right. So again, what we do is left click over the stop and drag it down. Okay, so we got short here, and our stop is here for the time being. And you notice the green line is trying to get into the cycle. And once it does, okay, we'll just close the trade out. Okay, well, game over. As you approach that level, okay, just start squeezing it down. Okay, just like I'm doing. All right. At some point you're going to get stopped out here. Okay. The question was, were we trending? No, I don't think we were. Okay. But this is a setup. We're taking it. I did this just to show you some action on the DOM. There was an opportunity actually to do something inside the DOM. Okay. So the green line is in the cycle. Exit at market and cancel. Huh? Yeah. Exit at market and cancel. The green line is in the cycle. Why did I do that? It keeps going down, Bert. It doesn't matter. What we expect to happen is the green line to pull away, okay? And the market's going to go back up. It's going to reset, okay? All right, so let's see if it happens again. Now, things were happening really quick. So the one thing I didn't get to talk about is in step number 2. Step number 2, the normal thing for the market to do is to gravitate toward this green line. This is what we're looking for, right? Here's something I want you to also get in the habit of doing. As soon as you get this cross, whether it's a bullish or bearish cross, you better activate the trend line. And that's right here. If you're using DT Pro, all you have to do is left click on it. And the reason you're going to do that is because your mind frame from this point on is, hey, the market should pull back to this green line. Okay? So as we do that, I want you to draw a trend line. Why? Why are we doing this? Because there's 2 reasons. Number 1, if the market has so much bearish momentum here, it's not going to get to this green line and fall apart. Okay? It's not going to get there. All right? And number 2, if the cycle turns color on us, well, the trend line is required. And we're going to need to close below the trend line before we can get excited about taking any action. Okay? If I scroll this up, notice we had the bullish cross here. Why is it a bullish cross? Because the MA1 is blue. As soon as you get that cross, start drawing trend lines. Okay? Because we never know if it'll get to the green line. Okay? So the market, I left a lot on the table. Doesn't matter. But at some point, because this is all bunched up at the bottom, that green line is going to do what it's doing now, which is going to pull away and start gravitating toward that BBC. So here's what we'll do again. Since the crude is moving, we'll move with it. So let's see if it comes back to the green line and we can draw another trend line. So your trend line should be activated. Okay? So we're looking for another green. Yeah. So again, Mark, if we're getting short, we click in the red. If we're getting long, we click in the green. Okay? Boy, look at that. A lot of action going on, huh? Finally. It's okay. There was a runner. Here's an observation, okay? The reason why you're seeing this kind of crazy action, we were stuck in a box here for a while. See this? Kind of stuck in a box. Okay? Once you break, it's like barging down a door. Takes you a few times to barge through it, right? Did that about 2 or 3 times. Once it broke through, you get this impulse move. Okay? That's what happens. So if you get one of these on accident because you're bumping against support or resistance, it might be one of those times it barges through the door and it just lets loose. Okay? Yes, Mark. All right. It'll reset itself. It's trying to do it here, so it'll reset itself. All right. All right, let's try gold. Let's switch guns here. Okay? Here's another one of those examples. Okay? So 2 things to point out here again. Okay, there's nothing happening here. But the observation here is we are trending. We're making some higher highs. And you notice how I zoomed out a little bit? There's nothing here. Okay? There was here, right? That's sideways to me at this point in time, right? And this pullback to the BBC, you notice it did the normal thing? No, this is not a long to me. Okay? We were having resistance here. There was a blue cycle. There was bullish separation. It had all the ingredients, but it was busting up against resistance. Notice when we barged down through the door, went up like a rocket ship. Okay? Okay? So there was some resistance here. But going back to the trend line thing, because this is one thing people kind of fail to do. Okay? The reason why we draw the trend line, okay, one of the reasons, in the event that it cannot get back to the BBC. In case it can't get back to the BBC. Okay? That's why you do that. Okay? That's important. Okay? If you do that in advance and the market takes off, you're already in a position to go inside the DOM and execute. Okay? You're not doing after the fact. You're not fumbling the ball. You're already in a position to get inside the DOM here and left click and take action. Okay? So you got to get in those habits. Okay? All right, so for the moment, the gold is trending up. Okay? But it needs to make a higher high. Okay? Let's go back to crazy crude. So something got into crude. So again, all right, so here's another point I can make, which is kind of cool. As I said, we draw the trend line. Okay? Because we never know if it's going to get to the BBC, which is happening now, or this cycle turns color on us. All right, so here we go. The cycle has turned color on us. So the market has to close below the trend line before we can take action. When it's red, everything's the same color and the probability stacked in our favor. Boy, when you get that close, no trend line is required. You just need the down close, okay, right here. And all you have to do is to push the button. But if this turns color on you, the trend line is required, and a close below is also required. Okay? Now, we're looking at a potential disqualifier here. This is okay as she starts curling up. Okay, so the cycle has turned color on us. This is okay. This is good for the home team if we're getting short. But if she starts turning color, it's watering down the probabilities. Okay? That's why the trend line is required. That's why we need to close below the trend line, because this is telling us there's a warning here. The market might be retracing a little bit further inside this downtrend. Okay? That's what it's saying. If she turns blue and starts curling up as she's doing now, that is a disqualifier. We will not get short. Okay? So right now, we've talked about two things that disqualified trades. Number one, if we're trading sideways, you do not push any buttons, period. And if you're uncertain about that, don't push any buttons. When in doubt, stay out. Okay, it has to be easy and obvious. Okay, the second thing, if the cycle turns color against you, it's a different color. We want red. This is blue. And she starts curling up. That's number two. Don't touch it. Okay? Now, you might look at this and say, okay, hot shot. How do I know if that's a 45-degree angle or not? Okay? You don't. I can draw something for you and say, well, this is how I would define it, 45-degree angle. And then you'd say, well, that's about 30.6. The idea is this, guys. When in doubt, stay out. If it's not easy and obvious, don't push any buttons. This is already telling us blue cycle is watering down the probabilities. And if we start getting something that looks close to a 45-degree angle, why would I put myself at risk? Don't push the button. Okay, that's the answer to it. Just don't touch it. All right? The third one is about to happen here, and which is the final disqualifier, is this. See this black step line? Boy, that was great on the way down, right? Okay. If the market pulls back to the BBC as it does here, okay, and at the time where we get the down close, and that black step line is starting to touch the BBC as it's doing here, it's not exact, but I'm going to make the point here. That black step line gets into the BBC, that is the third disqualifier. That's usually associated with a cycle that's turning a different color and starting to curl up. Okay? So, different color waters down the probability. If it starts curling up against us, no trade. And the third piece of the ingredient is, hey, if that black step line gets into the BBC, if you're brand new, this is our BBC, our green line. Okay? Then that's the third one. Okay? So we just went over the three disqualifiers in this one little trade here. Okay? All right. Let's move forward. Okay, so crude's off the table. I'm going to delete the trend line, get in the habit of doing that. Just right-click over it and hit remove. All right, let's go to the indices. Let's go to the S&P. Okay. Notice we have the bullish cross. Okay. And we're getting a pullback, right? If we're getting a pullback, what should we be doing? Drawing a trend line, right? That's a pretty sour trend line. Draw it again. That's how your trend line should be drawn. Off the tops of the wicks. Okay. Are we trending? Well, we got some higher highs here, so I can't rule that out. Okay. Notice how I zoomed out. All right. So the normal thing for the market to do is do what? Pull back to the green line. Okay. Do we have a blue cycle? We do. Do we have bullish separation? Yes, we do. Okay. Someone's asking me about the green dots. Okay. This is called dynamic resistance. Okay. Those are going to come into play when we talk about momentum trades, which I'm not going to go over. Okay. Because it's a little bit more advanced. Okay. A little bit high speed, and you really have to be on your game. All right. But here we got one of those situations where if the low is 28.79 and a quarter, if it goes to 28.80 and a quarter, that's going to be 4 ticks, right? So if we want to be proactive, and again, you're going to hear this a lot in the training room, we would end up right-clicking at 28.80 and a half. That's our way of being proactive. Okay. The market's down here. We're waiting for the market to blast off. Okay, before we get long. We're thinking long because the MA1 is blue. Okay. Now, we're in that situation. Okay, here's an observation. The cycle. Okay, we have bullish separation. We have a blue cycle. But take note. Look at the cycle here. How flat it is at the midpoint. Look at here. See how flat it's becoming? It may stay like this. Okay. If I'm faced with this, okay, we've drawn all the lines. We did everything that we're supposed to do. If we get a blue line that's flat, like a blue cycle here, okay, you know what? It's not that easy and obvious to me. Take the trade off the table. Okay, it's not that easy and obvious. Okay, so what am I saying? Ideally, we were looking for the same color, but we're also looking for slope of the cycle. If I'm bearish, I'm craving this. If I'm bullish, I'm craving this. Not only is it the same color, but look at the angle or the slope that's on. That's pretty cool. Okay. All right. So going back to the S&P, it's going to give me another opportunity to get inside the DOM. Like I said, get inside the DOM. Okay, it doesn't. There we go. Oh, I bought two on accident. Give me an opportunity to buy it. Okay, as I said earlier, I've created a bracket. Notice as I push that button, okay, I bought a whole bunch. All right, anyways, okay. We got long based on the close above the trend line. Okay, that's what we did. We drew the trend line because we never know if it'll get back to the BBC, correct? Right? We never know if it's going to get there. We had a close above, so that's good. Okay? All right, so we talked about the market. Actually, it was trending. We have some higher highs, so that was good. We took that off the table. We did note that, okay, that the cycle was in a bit of a funk here, was kind of flat. All right? So we had to be careful with that. So I built the bracket. The buy stop was selected and the sell stop was selected. Again, as soon as I got in, the stops were already entered for me. I didn't have to do anything. Okay? So the money management rules are, again, if the market goes plus 4 ticks in our favor, okay, or closes on the other side of that MA1, which is this blue line right here, what we'll end up doing is dragging our stop up and releasing it. Okay? Dragging our stop up and releasing it. Okay? These are our stop losses underneath. Okay? All right, Bart. Can't do it in the chat box just yet. I can email it to you. Okay? So for long from 28.80, there's the close. So here's what I do. I left click, drag, release. Left click, drag, release. Okay? The green line is already in the cycle. Would you agree? That is the trade. Okay? What I would do is exit at market and cancel. Okay? That's what I would do. Okay? Because the green line was in the cycle. That is, no, it's not a trailing stop. I'm trailing the stop. Okay, I'm physically moving it. Okay? So, okay, you got that? You're clear on that, Mark? Because I was going to go in there and show you again. All right? So we want, okay, This bracket here allows us, the platform, just to automatically put a stop loss in. And the stop loss is always 8 ticks, right? It's in the rules. Follow the rules, okay? All right. Let's try a currency now. Let's go to the euro currency. First thing we tell ourselves, are we trending? Right now, no. I'm not a big fan of the euro. Why? Because we have resistance here. Would I notice that if I was staring at this screen? No, it would tell me we were trending up. If I take a few minutes to zoom out, we have a double top. So I'm not interested in the euro. The British pound. We have support here. Okay. Support here, and now we have support here. Okay. Notice how dynamic support and resistance are side by side. If you're unsure about whether we're trending or not, okay, dynamic resistance side by side is a good reference to say, you know what, we're trading sideways. Okay. So if you're unsure, number one, we know, don't push any buttons. It's got to be easy and obvious. But number two, if you're really doing your homework and you're wondering, are we trending? If dynamic support and resistance are side by side, that's a clue. Nothing's going on. Now, if the British pound starts trading below old support, then we'll get crazy about it. Okay. But right now, we're not. Let's try a few more. Canadian dollar. I'm just picking stuff. Notice dynamic resistance side by side. Okay. Zoom out. Sideways action. Okay. You might say, hey, we had a pull back to the BB up close. Nothing going on. No separation. That's pretty typical of when a market is trending sideways. You'll get a flat cycle or just a hot mess when it comes to the slingshot. Australian dollar, zoom out. Okay. We have the bullish cross here. Okay. A few obstacles ahead of us, so nothing really to be said there. All right, let's check out crude again because it was rocking and rolling. So that's where we were. It really hasn't moved that much. Okay. This is about where we talk when we ended the crude session. Let me go to natural gas. Okay. Obviously, this one's trending. Lower lows, right? Again, another reason why we draw trend lines. Because we never know if it'll get down to the BB. We'll never know if it gets to the BBC. Okay? We never know if it gets to the BBC. Here's that warning flag, right? It's blue. Now it's starting to curl up. That's easy a 45-degree angle. Okay? So what this is implying, this, and then potentially this. Okay? That's what that's implying when you see something like that. Okay? So you want to stay away from the short side when you see that. If you end up drawing multiple trend lines like I have, a quick way to get rid of them, see this little select all button, this dotted square down here? Left click and engage it. Notice how the X turned highlighted, it's dark. That'll remove all the trend lines. Okay. Back to the S&P. This is where we left off, where we got long. This is where we got out because the cycle was at the time getting into it. The green line was getting into the cycle. And notice how dynamic resistance is kind of keeping it in check. Okay. So we ended up getting out here. If we would have trailed our stop, we would have gotten out here at break even. So you decide. The Dow, 4-tick range. We're trading sideways here. Okay, we need some higher highs. Okay. Same thing for the NASDAQ. Okay. If we go back to that Dow, and we change the time frame to an 8-tick range chart. Okay. Same rules apply. See if anything qualified here. We were stuck in a box here for a while. As I zoom out, see this? That's the box I'm referring to. It's just really, now we started trending, in my opinion. The reason why I changed to an 8-tick range chart, okay, 99% of the time will be on a 4-tick range chart, okay? But when markets are moving fast, okay, like the NASDAQ and the mini Russell, it's going to be too fast for you to push any buttons. You're going to have to slow it down, and one way to do it is go to an 8-tick range, okay? That's why we do that. But for training purposes, because that's what we're doing here, we're going to stay on this 4-tick range. All right, I'm just skipping over markets here. Okay, gold right here is a warning flag, right, for anyone that might be long. What's the market doing? The normal thing, pull back to the BBC, right? That's what we expect to happen. Is this a good thing to be looking at if we get toward the BBC? No, not a red cycle. Certainly not curling over like this. Okay, so that's a warning flag. Okay, you should not be attempting to go long. Okay, even though we had some resistance here, see the close here? See the blue cycle, how pitched it was at a 45-degree angle? That's what we crave right here. That's ideal. Okay, this is also ideal. Okay, the slingshot's being pulled back pretty far. Okay, so then if you do that, the farther you pull it back, the market should move a lot further up. Okay, we should make a bigger move to the upside. Okay, that's why it was referred to as a slingshot. Okay, it's just a pullback in this ongoing uptrend. Okay, and guys, look, there'll be times where we could get to the BBC here and the gold shoots up and we had a red cycle, and you're going to point the finger and say, man, that webinar was on Thursday. Bert said, not to do that, and I missed out. Most of the times that this will backfire on you. All right, so I'm confident to tell you, stay away. All right. Let's go back to crazy crude. Okay. Again, that's one of those examples where you get the down close. The cycle's a different color, pushing up, and look, the market's going down. They're like, man, I could have made some money on that. Yeah, I know. All right, so crude is not in a position. Natural gas is not in a position. Pay attention to the euro. Again, double top. Okay. This is favorable, right? We talked about slope. That's favorable. That's what we'd like to see. Okay. Now we had a cross back here, right? We had a bullish cross, just lacking the trend, right? So the normal thing for the euro at this point is to pull back to that green line. That's what we're looking for. But again, nothing until those two tops are broken out. So what could happen, just like that crude is, we could get that pullback to the BBC, and all of a sudden, for whatever reason, we start building up, and then we punch through this double top. You might get that impulse. Okay? And you got one of those runners again. You don't know. You don't know what's going to happen. What you can control is the risk, right? So 8-tick stop. The market moves in your favor. You keep moving it up. You moving them up. You keep moving it up. Okay. All right, we're almost getting to the end here. This is crazy. I'm just looking for other markets. If I don't find any, then we'll just call it quits. Okay, this is the S&P moving up again. The Dow is too. So let's see if we can do this. That's a warning flag. Red and a down slope, okay? No matter what happens here, okay, it might head up from here, but see this? That's no good. That's the pullback to the BBC. We are trending. That's necessarily not good, okay? That's a 45-degree angle against you, okay? So what this means, okay? Bullish cross. We're looking for the market to do the normal thing, which is pull back to the BBC. It does that. In the process, we draw a trend line because that's what we're trained to do. Do we need the trend line? Well, actually, we do because the cycle is red, but it's this candle here that closed above it. So actually, at this point, okay, that is your long if you're ignoring. That is it right there. That activates the long. And right here, it's required because the cycle is red and turning a different color. As I said, this is a warning flag, okay, that something might be changing. So that is one of those disqualifiers where you don't push any buttons, okay? And here we go. It's one of those things where you're seeing the market go up, okay? And you're missing out on an opportunity, okay? But again, it's saying be careful. That's one of the big traps I see people fall into. A lot of times Michael is taking trades in the room with different cycle colors, and that's fair game, okay? As long as it's not going against you, that's fair game, okay? But I think if you take the approach, if it's easy and obvious, you might stay out of some of these bad trades, okay? The results are usually break-even trades, which this would have been right here anyway, so no harm, no foul, or losing trades, okay? Can I quantitate what's good or bad, after years, whether these are good or not? No. Just from experience and watching it over 8, 9 years, yeah, I'd say I wouldn't touch them. So I'm asking you not to touch them. But, you guys are pushing your own buttons, so. All right, so that's it. I'm going to call it quits because we got about 5 minutes left, and kind of go from there. So, again, if you're brand new, this is going to be a good syllabus for you to lean on, okay? I went over the trade setup in slow motion, okay? We applied those same, man, I'm getting some bings here, so hold on. Turn that off. Okay. If you're brand new, this is going to be a great syllabus for you to lean on, okay? This is a great cheat sheet, okay? We went over the trade setup, slow motion. There was a few good examples that we saw inside this hour, okay? Things you have to be looking for. Trending markets. Get in the habit of zooming out, okay? That's a big step for me. Number 2, after the cross, another big step for me. Engage the trend line. You got to get in the habit of drawing trend lines. You're going to see Michael do it. You should be doing it, okay? The other thing, the cycle color, right? We talked about that. When everything is the same color, we stack the probabilities in your corner, okay? Can you take trades when they're a different color? Yes, okay, as long as the cycle is flat. But if anything turns against you, that's a big red no-no, big fat disqualifier. So don't touch. A lot of times those backfire or result in break-even trades, okay? And in the end, when in doubt, just stay out. If you're not sure if a market's trending, if you're not sure if the cycle turning color on you is at a 45-degree angle, look, if it's not easy and obvious, don't push any buttons, okay? And in the end, if you end up going down the CFRN path and if you're struggling or whatever, not only do you have Michael and Dwayne that do a one-on-one mentoring session, you also have me, okay? We can sit down together and we can evaluate what you're doing, how you're doing it, and see if I can poke at some of the stuff that you should not be doing, okay? So that's fair game. So if you decide to go down that path and you decide to sign up with DT Pro, okay, I'm going to spoil you at the desk here when I can. Okay, but you got to raise your hand. All right, you got to ask. All right, at least if you call the desk here and you're having problems, I'm going to be the one that picks up. So we can work out any platform issues you have, trading habits that you have, anything. Okay, you just have to ask. Where is the syllabus? We just went over it. This 1 hour session, Mark, is the syllabus. Okay, and I know you've been here before. So, and if you go inside the training room, yeah, if you go inside the training room, Dwayne or Michael has one already attached in there. Okay, it's kind of like another cheat sheet. But I think, cheat sheets are good because they're they're two-sided, okay? Because you're going to see it, in its purest form, the ideal setup. But when the heat is on, markets are moving, there's a little pressure, okay? So better to see it that way too. All right. So, all right, that's it. So I recorded this. If you want to review it, I have to download it to YouTube. Usually it's usually about a 24-hour process. Okay. So we'll see you next Thursday. And I'll be in the room in the morning. I just hang out in the background. I kind of keep quiet unless Michael takes a break, and I might pop in, but I'm always in the background. Okay.